Hello, fellow preppers. 'Tis I, the Rumpled One, coming to you on Monday, November the 27th, the year's 2023. Let's talk trading. Crucial Mistakes Part 2 with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal. Walmal, welcome back after Turkey Day vacation. So I talked about crucial mistakes with the traders out there and what I thought some of the crucial mistakes are. So what's your take on crucial mistakes?
Well, the first thing is crucial. That word crucial means extreme, and mistake, well, that's either one, something that was unintended that went against you, or something that, that you did that you shouldn't have done. So a crucial mistake is something you've done something extreme to cause a really big mishap in your financial stability. And in terms of Forex and trading, and especially in Forex, that can happen very easily. Now, the number one thing I think is because a lot of these brokers, they offer what? They offer lots and lots of leverage. I mean, there are brokers out there that they're going off of 500 to 1, 1,000 to 1, and it's sort of like, that means what's nice about that is that you can go out there and with very little money in your account, go and actually buy a big chunk of a pound against the dollar or whatever. But the bad thing about that is very little movement means you can wipe out your account if you don't have a big enough account. So I think that one of the biggest crucial mistakes you can make is going and, having too much leverage, being with a broker that has too much leverage. Now, if you got a broker that's doing well by you, and what I mean by that is gives you a decent spread, doesn't overcharge you on commissions, and at the same time, they happen to give you a lot of leverage. Well, there's nothing wrong with that. Just make sure that you don't go and use all the leverage, and be disciplined about it, And actually, this probably should be the number one thing, and that is trading without a plan. Well, what's your plan? How are you going about this trading? What is your method for getting into a trade? What's your method for getting out of a trade? What's your risk? What's your money management? How are you going to deal with when it comes along? Not if it comes along, but when it comes along. How are you going to deal with emotional issues that you're going to go and have to face? If you don't have that, in place, written down, somewhere, and so that you can go, one, refer to it, and we've talked about this before on these calls, and that is, maybe you should be, especially if you're a new trader, looking at that daily. Maybe even, looking at it a couple times during the day, just so that you're reminding yourself of what your plan is. But I see so many traders that just go out there and just, they have a plan, but the plan is in their head. It's not completely thought out. It's not laid out in a way that would get them, that allow them to really go and take advantage of the what's out there. And then they wonder why they blow things up, I was talking to one trader a couple of weeks ago where he does well, does well, several days in a row does well. And then the next thing you know, because I don't think his trading plan is really written out all that well, what happens is it blows everything that he had accumulated. Maybe even blows the account, and does that time and time again, and unfortunately, that's not just this one trade. That's, that was me. That was a lot of people who do that, and we just don't go and lay it all out. So I would say the number one, crucial mistake people make is they don't trade with a plan, and then the next thing is that, it goes hand in hand. Some people say, you shouldn't be trading, you can't trade against the trend. Well, I'm not going to go and agree with that one, because it depends what your method is. If you're trading against the trend, or rather, if you're trading with the trend, the trend is your friend and all that, and that's a great thing to go and do. And, if your method allows it. But what if you're like me, where you go and you're looking to go and just pop in a couple of pips here, a couple of pips there, And what you're doing is you're really getting reversals. I'm not looking to go and get a big trend move. I'm not looking to pick 10, 15, 20, 30, or 40 pips. I'm looking to pick up 2 or 3 pips. Well, that means I can go and trade with the direction the market happens to be moving in, and I can even be trading against where the market tends to be moving in. The only thing is I got to be a little bit more cautious, which points me back to point number 2, which is what? Have a plan. What's your plan for doing it? How are you going to do it? Are you keeping your stops close? Are you going and getting out of your trades? Are you trading against, to quote, the direction of the market or your bias? Are you getting out quickly enough so that you can go and take your profit while you have it? So those are some of the biggest, some of the biggest ones. I guess just thinking about this for a second, I think this was something, these, for me anyway, they go hand in hand, and that is emotional trading and impulsive trading. What happens, I do it from time to time, and Hero, you can go and call me out on this, because I've done it, you've seen me do it, but, I'll take a loss, and then what I'll do is I'll get mad at the market, take another trade, when I shouldn't have. I didn't really have a full setup, and the next thing I know, I've gone and, jumped into a trade I shouldn't have jumped into because not all my criteria is there. Again, I broke my trading plan, but the emotion of the market can so easily pull you into that. And the next thing you know, you go and find yourself in some place that you don't want to be. Which goes hand, and the thing that goes hand in hand in that, at least with me, is that, oh wow, look at the market move down. The last 2 hours, the market moved down. The pound is really going down. It went all the way up there and it hit the 26.50 or whatever it was. And it touched that. That's a logical place for it to fall. It's now fallen, 20, 30, 40 pips. I should be in on this. And you just jump in. Okay, what's the problem with that? The problem with that, obviously, is that you've missed the trade more than likely. Okay, you may get something, you may not get something. But the point is, you're not following your trading plan again. The times when people do tend to do that is, NFP gets released, and then they see the market reacting, and, let's say NFP gets released, and, it turns out that, they created 400,000 new jobs, so the pound is going to go down, it's going to probably fall pretty quickly. And it's sort of like, okay, I'm jumping in here, and you jump in, and sure, you may even be up, 10, 15 pips, and then immediately it slams a wall and then jumps 50 pips in the other direction. Again, impulsive trading, what you're trying to do, when you've done software development, we used to call that, going and trying to catch a falling knife, meaning that what's happening is you're just jumping in, and you're praying to God that, it's going to continue going in your direction, because you have no real reason why it should do that. If you are a fundamental trader, guess what? You should have been in, way before this, and taking advantage of this way before this. Unless you've got some type of plan, that could always be the case, but more times than not, people don't, and they make the crucial mistake. They jump in too late, and then what happens is they get rebounded out, and the stop loss gets hit because of, the market extended too far, and now it has to come back, and the next thing you know, you're now sitting there, and you're wondering why you lost 30 pips. So those would be my experiences with crucial mistakes in trading.
Yeah, well, you mentioned something first off about doing something that's not on your trading plan. Well, the flip side is not doing something that is on your trading plan.
Absolutely. If it's on your trading plan, you're supposed to do it. So, and I think that you and I, we both are guilty of this, and that's sort of like, okay, looking at the charts, there's clearly a short here, and we just don't take it. And then was like, oh man, I could have had 3-4 pips there, and oh man, I could have had 2-3 pips there. Oh man, I could have had another 4 pips over there. And then when you add it up at the end of the day, it's sort of like, I could have had an additional 20 pips on top of whatever my day was, and that can be a crucial mistake, because over time, if you do that every day, let's say every day you miss out on the opportunity of having 10 more pips in your bank account, okay? And you're missing it not because, you were taking a break from trading because you just got out of a very, very difficult trade, and you were doing the right thing because your trading plan says, okay, after you get out of that situation, take a break, catch your breath, take a walk around the block, whatever it is. You're not doing it for that reason. You're just not taking it because you're afraid to take it. You're not taking it because you're not paying attention, and you miss it for those reasons. Well, if you miss 10 pips a day doing that, that's 50 pips a week. Okay, you want to really go, put that really into perspective. That's 1,000 pips a month. Next thing, that's, is that right? No, 50.
About 200 pips a month.
200 pips a month. I don't know where I got 1,000 from, but that's 200. That's 200 pips a month. Okay, that's crazy. What I want is I want to get 100 pips a week. So that's 2 weeks worth of trading. I'm just giving up because I'm not paying attention. I'm not doing what I'm supposed to be doing. And, so, you want to go and take the 200 pips and multiply it out for the year. Okay, now multiply that by 10. So now you're up to 2,000 pips a year. And let's say you're only trading one lot. Okay, that's $20,000. That's $20,000 to be trading one lot. That's not pocket change anymore. That's real money.
Exactly.
So these things, it's funny because when we think crucial mistake, because I said right from the beginning, what does that word crucial mean? It means extreme, right? Here's the thing that really I think you got to go and put in perspective here, and that is that crucial could be little things. It doesn't have to be a major, big thing that you're doing. Okay, it can be a simple little thing, but you're doing it over and over and over again, and it adds up. So a crucial mistake, sort of like the old expression, die of 1,000 nicks. If you have something that's killing you and wiping you out, because of, you're losing a pip here, losing a pip there, losing pips over there, wherever it may be, and, the little itty bitty things where you're just not getting what you should be getting. What I mean by that is your trading plan says you're supposed to be getting 3 pips per trade, and you're only taking 1 pip per trade or a half a pip per trade because you're getting scared for some reason, and you're just jumping out of the trade early. You know what? I'll tell you, brother, you need to sit down and you need to figure out why. You need to figure out the emotional part of that, because it's just a little thing. You're only giving up a pip and a half. What's the big deal? I gave up a pip and a half. Pip and a half, today, for instance, I got 13 trades. Pip and a half for me, would be the difference of what? 17, 18 pips. That's my goal for the day. So you gotta keep those things in mind. Remember that, a crucial mistake could be something simple. One little simple change that you have to make because of something you're not doing right. And whatever that is that you're not doing right, again, it could be just, it could just simply be that you're just not paying attention. It could be that you're not following your plan. It could be you're emotional. And I'm going to jump on that emotional thing for just 10 more seconds. I know we have to get off this call, but, the thing about that emotional thing is, man, I haven't said this in a while, but it merits so much, and that is you got to know yourself. You got to know who you are, because if you don't trade who you are, then what's going to happen is the market's going to trade for who it is, and it's going to wipe you out.
Yeah, that's for sure. So, fellow traders, there's Walmal's take on crucial mistakes. And let us know in the comments if any of you have a crucial mistake that we may have missed. Because for every one of us, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.